the end of Q1. So far, year to date, it's been interesting. If you ever have any appetite to be an economist, looks like the markets got a little ahead of their skis coming out of January in the first Fed meeting. So there's obviously, like we've kind of reiterated the past couple of weeks, expectation that there would be one, if not two, rate increases this year, and then declare victory and start cutting rates. Maybe even a rate cut this year. It looks like it's going to be the total opposite of that, and that was kind of driven by the most recent report this past Friday. The Personal Consumer and Expenditures Price Index, the PCE, jumped 5.4% versus the year prior, way, way above Wall Street's expectations. And if you're a stock investor, obviously push your holdings way down on Friday. So there's just been a parade of February here this month of employment, CPI, PPI, all kind of surpassing analysts' expectations. And the flow through of all this is that rates are, there's if not two, maybe three more rate increases this year coming our way, and the terminal rates go past 5%. So the piece of data is that the Fed keeps pointing to everything being data dependent. A lot of different noise there about December and January reports versus February reports, but basically we got to stay tuned there. And the recent release of federal minutes last week highlighted that nearly every member of the Federal Reserve deemed it appropriate to continue to raise interest rates. So that is in our future. Markets have responded, whether it's treasuries or just consumer home loans, by all jumping up pretty significantly the last 7 days. And just everything's going back up from 12. So some of the biggest markets, surprisingly, rents went up were Los Angeles at 5.6%, San Jose, and then obviously our usual Miami and even Boston had a pretty significant rental increase. So huge sell-off in treasuries of late. That was reflected in kind of the feedback we're hearing in terms of our own pricing. To kind of make lemonade out of lemons, though, looking around, it looks like single-family rental homes rents are on the upward trajectory once again. The median asking rent for a 3-bedroom single-family rental went up to $1,848, or up $128 from December. So again, with inflation, obviously it hurts on the bottom line, but it also grows the top line. So generally, that's a point to make with our clients that are continuing to look at refinances and may see rates that are not expecting. We should be seeing top line rental growth too. That is pretty massive. And another interesting stat that popped out of all this is that for the first time, rental housing development outpaced single family for sale housing development. So kind of the latter half of last year has transitioned a lot of sale housing communities into rental communities, which for all of us that are interested in the space, it's interesting to see the development of single family rentals in general. Getting into the nitty gritty of all that, the average single family home that's being built by these developers is actually getting down smaller. So there's just a lot more density coming into communities. Last but not least, a couple more interesting points to make is that Redfin released their February housing report last night, and the highest number so far since I've been tracking some of these numbers is nearly 25% of Redfin users nationwide are looking to move to a different metro area in January. With remote work and elevating housing costs. Not surprising, Miami is the most popular migration destination in January, claiming the top spot for the first time since August. But, half of the top 10 most popular destinations are in Florida. So Tampa, Cape Coral, Orlando, Sarasota, all on there. It does sort of fall in line with what we're seeing from deal flow and also in the property portal with, inventory in and around across Miami. So it's a good talking point to mention. Down from the 7.6% annual gain in November. So very consistent with what we're seeing with our own kind of investor slowdown in pricing. Again, all things being relative. We're coming off extremely potentially once in a generation price jumps in 2021, 2022, which you're even seeing across, Amazon, Portfolio, and everything else. The cities that were seeing the biggest price gains again were in Florida, Miami, Tampa were there at 15.9%, 13.9%, and then Atlanta had a big price gain. So sunbelt, Florida, the Southeast continues to be a popular place for investors, and where we will probably see a lot of deal flow, in the near future.